And for that, we chose Mumbai for obvious reasons. Because for finance, for banking, Mumbai is our heart and soul, our inspiration and our value system. And therefore, it is wonderful for us to be able to present today's conclave to you in a physical manner after a gap of over 2 years. The focus of this conclave is financial markets lock, stock and barrel, meaning thereby we are here to present and learn from each other in a holistic sense about the financial markets, not as an island in the economy, but as an integral part of the entire ecosystem that is the Indian business and the economic landscape. Our sessions are therefore going to cover new banking, the financial landscape, how the tech companies, rating agencies, and other stakeholders are working together in the economy of future. We'll focus on issues like ESG, insurance reforms, how to address the volatility and the uncertainty issues that's so commonplace these days, especially on matters which are sort of beyond our immediate control. The idea is therefore to learn from each other. And before I hand over and request our opening session speakers to take the dais, just a small sort of backgrounder from our end as a Chamber of Commerce is that India as a nation has, you must have already heard, read, that we are number 5 as an economy in the world. We have overtaken our colonial masters. And the reason why probably we have been doing so well, and possibly we have been able to withstand the inflation pressure slightly better than many other leading economies, is because how we sort of managed the last few years. I'm sure the experts will talk about it more, but on the brighter side, over the last few years, some of the key economic parameters, including investments, have recorded a larger increase if you take the world's 5 other economies which are around our economy as a whole. And you will find that in India, investments have actually increased by over 20%, consumption by 26%, and exports by 15%, which represent the 3 key engines of growth. We have with us 2 of our former presidents, Mr. Ambarish Dasgupta and Mr. C.S. Ghosh, who will kick off the opening session. Between Mr. Dasgupta and Mr. Ghosh, they have, I think, close to 80 years of collective experience in banking, microfinance, and consulting. Mr. Dasgupta is a former partner and head of management consulting for both PwC and KPMG in India. And of course, the iconic Mr. C.S. Ghosh, the MD and CEO of Bandhan Bank. They will be joined online by Mr. Joydeep Roy, partner, PwC, and India FS advisory leader and global health insurance practitioner.
Good morning, ladies and gentlemen. My humble greetings to everyone, in particular to Mr. Ghosh. I'm delighted that Bengal Chamber of Commerce and Industries gave me this opportunity to set the tone for today's session, today's days. It's a very wonderful rain-soaked outside. The smell of the brewing coffee, the tea, and that sets the tone for the day, that it has to be a very stimulated ideation day. I mean, we are all inside, lovely weather, coffee, tea, and it's a stimulated ideating day. And that's the tone of the day. And that's true what we will be doing today, a stimulated ideation of what the banking, the financial services players should be looking like. I am myself personally very immersed in this subject, very invested in this subject, because I am responsible for one very large bank, private bank, for whom we are working right now, and therefore every day we are soaked with more information on what better can be done for our client bank to break the frontiers of the technology or to break the frontiers of the banking world. So therefore it's a very interesting subject for me also. There was a gentleman called William Goldwyn in the world of movies. He once mentioned about the movie that no one knows anything. So that was actually got very much identified as NKA factor, no one knows anything. It was not actually a comment he made to disparage the audience, but it was a comment he actually made to explain that how unpredictable the audience is. And therefore it's very difficult to really understand what their tastes will be. And this same NKA factor in the film, in today's corporate world of this, can be related to the VUCA factor, and therefore no one knows anything is more applicable possibly than film in this financial sector, that no one really knows anything. And therefore what we are seeing is an increased attempt by the bank, and when I say bank, I actually don't only mean bank, I mean all the players in the financial sector, is how to acquire more intelligence. How we really can acquire more collective intelligence. The banks can become more intelligent, not only relying on the human intelligence of their own worker and their own executives and their own staff, but how they can really become intelligent and how that is possible. Today it's in hyper-connected, the days of the hyper-connectivism. We are all hyper-connected between our back, front, middle office. We are hyper-connected to the external world. The banks are hyper-connected to the external world, to the para-bankers, to the other bankers, to the digital lending organization, to the fintechs, the insurance also similarly, everybody. It's a world of hyper-connectedness. And through that hyper-connectedness, the objective is to generate huge amount of information and the data. And therefore the other tone that we are seeing today is that through this, how really we can create our own data lake and the master data management. What should be our approach to really create an appropriate data lake, on top of which the next trend is how do we really set an appropriate interpretation of this data, an appropriate intelligence on this data, the cognitive intelligence, the conversational intelligence, the deep learning, the deep thinking. How do we really create a layer of intelligence? So it's an hyper-connectedness, generating huge information, the trained creation of the sophisticated, widely expansive data lake, and then on top of that, create the layer of the intelligence of how I better interpret the world, the external world as well as the internal organization in the bank. And therefore, how do I increase my intelligent prediction, intelligent analytics, not just of the customer, because we all know that the customer preferences and all are changing and therefore they want much more customization. This we all very much know. So it's not just the customers, but the entire world. So how do we really play well in this NKA quotient, no one knows anything, and or in this VUCA world? Now, along with that, what we are also seeing is an increased trend will be to enhance the operational resilience, because the banks or the players in the financial market cannot just cope up with this continuous changing, the vagaries of the economy, the climate, the geopolitical situation, the social unrest, the political unrest, various kinds of things which are contributing. And therefore, how do we really bring up our own resilience? And therefore, the operational resilience, how can we really enhance so that to withstand all the kinds of shocks which we will have to go. So one aspect is, of course, intelligence for the prediction, but beyond also additionally is the operational resilience. And that comes from hyper-automation. So therefore, we have seen that most of the banks or the other players have gone for their core banking system or gone for their back-end systems, the ERP systems, whatever they have gone for. But the day has come to go beyond that, the plus or beyond their core banking systems, through the adoption of the various fintechs, through the adoptions of the various emerging technologies like the blockchains and the others, and how we can really get into an hyper-automation stage. The objective is finally to give me much more resilience, much more operational resilience. And therefore, what we are seeing also, and that is the trend, is that how do I stay very innovative? And when I say innovative, so intelligence, hyper-automation, and then innovation. So when I say innovative, it's basically the innovation in the creation not only of a technological architecture, which is basically to plug and fit all the types of things that's happening, but it's also a question of not to build up a huge, monolithic, mega, gigantic organization, componentization of the system, how to get into much more partnering, creation of a major ecosystem around me, the componentization, plugging players into my own operations, and therefore to stay, and that is the key word today in the banking or in the financial sector world, is agility and nimble-footedness. How through my people, through my process, through my strategy, through my technology architecting, I continue to become absolutely agile and nimble-footed, so that any such shock comes or any new technology comes, I am there to make it very, very adaptable. Say, for example, today we have already started seeing in the major metros, courtesy Reliance Jio, the 5G coming in. And this 5G will be spreading to the interiors of the country very soon. So if the banks or the players are not so nimble-footed and agile to really immediately adapt this new technology coming in, and therefore increase or use this technology to increase their inclusivity, use this technology to increase their intelligence quotient, to their automation quotient, or to the innovation quotient, if they are become so much deeply mired and rooted into their style of working and they are not in a position to adapt, then that will possibly really trigger a very bad death for such organizations. So it's intelligence, hyper-automation, innovation, componentization, the loose structure, the process, technology, the strategy, that definitely sets the tone for the day. Also, additionally, I must say the two other factors which is coming up, and that will also be shaping up the bank and the financial sector's players, the roadmap, is the environment factor. Recently, RBI also has published their own advisories for how they should be operating. It's not their own ESG quotient, it's also the assessment of the ESG quotient of the ecosystem in which they play, the people that they are lending to, how the PEs are actually withdrawing from the world where they feel the ESG quotient is low, how the lenders are withdrawing from the world, how the customers are also withdrawing from the lending or from borrowing from a lender whose ESG quotient is low. And therefore, how do I really apply this automation, intelligence, innovation, not only in the enhancement of my own ESG quotient, but also in the enhancement of the ESG quotient of my entire surrounding and the ecosystem. And the second one is, of course, how through an appropriate intelligence and interpretation of the world, I actually take a much more predictive and preemptive stand to the risk situation which is upcoming, to the risk analytics. How do I really automate much more, and how do I be much more innovative to the upcoming risk standards and the compliance. So that actually sets the tone for the day. I think there will be a lot of discussions, deliberations today, sessions which will go much beyond the points that I have touched upon. Some sessions will be touching upon these points, some sessions will go beyond these points, and I will take a pause here and look forward to these sessions. And I will just end by saying that Mark Twain once to a speaker said that after he spoke to the speaker, he jokingly said that if you were silent, then people would have thought you stupid. But then why did you open your mouth to dispel all doubts? So I think I fell in the trap, and I have now dispelled all doubts. So therefore, I will now request the flow of wisdom from the future for the today's all deliberations, which will come now today. And thank you very much for giving me these opportunities to set the tone for the day. Thank you so much.
Thank you, Mr. Dasgupta. Now I would request Mr. Chandrasekhar Ghosh to kindly address us. Thank you, sir. Over to you.
Good morning to the respected audience and dais. Ambarish Da. I am not in a market expert. In front of all the analysts, and like is in front of Tamalda, I cannot like to discuss about the market. So, but I'll be like to give little bit the situation of the country and financial inclusion, how it can be helpful for the people. The global economy is going through a tough phase now. The war one side and COVID is another side. Large economy under visible as a stress. But Indian financial market have been more stable than the global. If I see that the data shows that the financial year 22-23, GDP is widely projected in at 7%, inflation controlled under 7%, and credit growth in August has come 15%. All these three parameters shows that the Indian economy are better than any economy of the world. And we recently seen that Indian economy have been crossed the Britain economy. So growth potential in India is immense. If we come to this, the financial inclusion, so financial industry is playing a better role to do it on that. Indian financial sector is on an upward journey, no doubt. And retail investors' awareness and willingness is at an all-time high. If I say that the demat account jumped 63%, which is amount-wise 89.7 million in the financial year 21-22. Tier 2 and Tier 3 are also contributing and penetrating in this type of significant number of demat account. Younger audience contributed to the large pie of the demat account. This is a very good focus given to the Indian economy. Return for the retail investor has also been promising over the last half a decade. All this has led to one of the best Q1 number in almost a decade on most parameters. Corporate and SME are coming back to banking sector for capex funding. Digital adoption was accelerated. It's a record during the time of pandemic and even after the pandemic. If we see that the UPI transaction happened in the first quarter of 22, it was in a 14.55 billion transaction have been done, which is the amount wise 26.19 trillion. But this financial year, first 4 months has come to double compared to the last financial year. That is also showing a very good jump. Growth about 99% in volume and 90% in transaction. What is the opportunities of Indian's banking sector? Opportunities of the Indian banking, 70% people are living in there. And it helps us to the financial inclusion and economic growth. Another one is coming, the new technology like the artificial intelligence and machine learning will further enhance our capability and efficiency. What are the challenges? Couple of challenges we are like to face. Legacy system pull the sector down, at times giving the advantage to agile startup and new banks. Banks must rethink their operating model to fully utilize the power of digital. Regularly, banks should be focused on that, the rethink of their reskilling and upskilling the staff capacity line with this, the digital. With the digital growing at the place, security risks are on rise. So that is also the another risk. We see that customer education is need to build up in the ground level, how they can be like to transact and avoiding this security risk. Upscaling, upcoming technical advantage such as the digital rupee will bring newer opportunities for all of us. Financial inclusion has to be the priority of the bank and financial institution. I wish the success of this day for all of us. Thank you to giving the chance to me.
Thank you, sir. We have started with innovation and intelligence. We have covered the economy, and now we would request Mr. Roy to address on connecting the dots between economy, banking, insurance, healthcare, and education. So Mr. Roy would be joining online. So can we have the camera with him? Mr. Roy, are you with us? Can you hear us properly?
Yes, I can hear you. Am I audible?
Yes, yes.
Visible?
Thank you. So I would request you to kindly have your address. Thank you. Over to you.
Thank you. Thank you. And it's always a pleasure and privilege to be with Bengal Chamber, but never more so than now and today, because while Bengal Chamber is nearing its 200th anniversary in another decade, I'm so happy to announce that this is the time when we feel so much together in spirit, because this is the year that we are celebrating our 150th year in India. So PwC has been in India for 150 years, and it's such a privilege and such a legacy that not joining this conference was not a choice, though I was away, but I couldn't resist joining today, and especially in this August company. Well, we are talking about the economy, and we are talking about various facets of the economy. And I will just share my screen for a few numbers to be there, not for you to read through and the numbers, but just to hold some points. So whenever we speak about the economy, and we speak about so many different facets of foreign investments into India, for the flow of money, growth of several sectors, the infrastructure, and so many different factors, which are really the macro factors. Sometimes it's important to look at the micro. And any developed nation, or all the developed nations in the world that we label as financially advanced or really booming at this point of time, there is something in common that you will find in all of them. And that is manifest in two ways: ready access and affordable access to quality healthcare and education. Very advanced regulations, which are going, and the largest single sector in our non-life insurance is still only 75,000 crore. So there's a lot of ground to cover. And unless we have full access to the healthcare for all sections of the economy, ideally through pooling mechanism like insurance, we will not be able to create an enabling environment for employment, for productivity, and for growth of the economy. It is a very encouraging trend that we see, that is the growth of the health insurance, as well as the spread of Ayushman Bharat, through which the below poverty line, now they have an ability to spend 5 lakh rupees for illnesses across the country. So which should have spurred the growth of a lot of hospitals around. Unfortunately, while we can put up the infrastructure, we do not have sufficient numbers of doctors and nurses, and that's another thought coming. In education, well, our enrollment rates and completion index in education have traditionally been low, and they were globally in the 60th percentile for enrollment, and completion rates are low. The dropout rates are high. But on gender parity, we have seen considerable growth, and that's an encouraging sign. However, employability after graduation continues to be low, and that's something which does not create skilled, efficient pool of people who should have been, you know, the largest pool of people in the world in the areas of growth, which are technology and all other skills which we call as professions, which are the legal profession, the accounting profession, consulting profession, as well as the medical profession. So we need to look at that. While our engineer rates are high, we are low in otherwise. If you look at payments, now we see payments, and we also see move from cash, but not so much as we would expected with the rise of digital payments. However, there have been certain silent revolutions going on. And payments are a key indicator of adoption of technology through which people can avail of all these services that we have today all around us. So certain numbers. Now, UPIs, we know how much it has grown. You know, the number of transactions in UPI have made India the largest online transactions of money across the world. However, that's not the whole story. Some silent revolutions are underway. The NETC, the tag system, the toll system, now that's completely moved on to online payments. Only very few people pay cash nowadays. Even cards, the combination of debit cards and debit cards and credit cards, where adoption and usage in India was low earlier, the numbers have grown. And the prepaid instruments, and I'm not even getting into the newer revolutions like BNPL, all of these are running silent revolutions of their own. And this has made India, the Indian economy today, a very attractive place for everyone to come and do business because of the trackability, because of ability to address people across the country, which was always a challenge through physical infrastructure of collection. Now, if we come to the more traditional financial services, asset management, banking, and insurance, well, all of them have been accused earlier, say 2 decades earlier, of being concentrated in urban areas, as well as doing 90-95% of the business from top few cities. Now, that's actually poised to change. Some of those are still true. For example, if you look at non-life insurance, if you look at even health insurance, it is highly urban today. Life insurance has moved, especially protection insurance has moved all over the country, to the surprise of some of the industry players themselves. However, if you look at banking, now there's so many segments of banking which have moved, which have come on, like small finance banks and payment banks. We still have a lot of ground to cover in both these areas, insurance and banking, to really make sure that everybody avail of it. Most people have an account today, and that's a great place to start. But like credit cards and other pieces where just having it is not important, usage is important, we need to keep moving the usage to the more organized channels. As far as asset management is concerned, as far as people's participation in the growth of the Indian economy, in the growth capital formation through stock markets, where you can get the Indian population to pool in rather than depending only on foreign investments or FI investments, we are still a long, long way away. The participation in stock markets of the Indian population is still less than 4%, and that's something which needs to move up. So we are at a very interesting cusp of history. I think the building blocks are there. The enabling regulations are there, and they're moving every month. Every month we see some or other enabling regulations coming in from all the regulators, from all the sector regulators. And that's something which creates the platform for transportation of money, which actually revolves into transportation of goods and services, and especially those which will create employment in India. So, in a way, I think that's the picture that I wanted to talk about, where the financial services sector is intrinsically involved in figuring out how the employment is actually generated not only in select areas, but across the country, making every place livable and workable so that the spread of population is uniform and grows with availability of affordable, high quality education, health, and employment opportunities. Thank you very much. We'll wait to hear from all other speakers today. An interesting day ahead. Thank you again.
Thank you, Mr. Roy, for wonderfully connecting the dots. For the audience, we have an announcement that if you can scan the QR code of the thank you card that you have received, you can watch all the profile. And you can also watch the program in Facebook and YouTube link, which has provided to you. Now, we have a very pleasant task to perform. I would request the mentor of the Banking and Finance Committee, Mr. Tomal Bandopadhyay, if you could kindly join us on stage, sir. We have a very pleasant task to perform. I would request my colleague Moon to hand, sir, if you may kindly join us, sir. Sir, I would request Tamal sir to hand over the memento to our former president, Mr. Ambarish Dasgupta, on behalf of Banking and Finance Committee, and also to Mr. Chandrasekhar Ghosh. Since Mr. Roy is not physically present with us, we will definitely send our memento to him. With this, if there is any question that you would like to ask or anything that, just give 1 second if anyone wants to ask any question. Any question? So I think we have, the speakers have explained it quite well. So with this, we conclude this session. We will start this next session immediately.